Apple trade. OX Alpha choose a long position. Its thesis was that the price was in an uptrend. A short pullback could retest the breakout area, and that buying the retest offered a clear path back toward the recent high. After the decision, the market did trade above the model's target. So, was this a winning trade? No. The model never owned the position. Its limit order set at $243.71. But during this 3-bar entry window, the lowest trade price remained above that level. The target was reached, but the entry was never touched. Under an executable benchmark, that is not a profit. It is a no-fill with zero return. That single case captured the exact question behind this video. Can a language model do more than just write a conventional market commentary? Can it turn market price data into a complete trade plan? Get the plan into the market under fixed rules and produce a positive result after fails, stops, targets, fees, and time limits. Today, I'm reviewing a one model only, OX Alpha. This is not a comparison, and it's not a recommendation to trade with any AI models. It is a forensics walkthrough of what this model actually did inside one published research pilot. Let's dive in. Okay, now let's take a closer look to the exact model behind these decisions, OX Alpha. Listed on Open Router under the slug, still OX Alpha. As you can see, OX Alpha is categorized as a stealth model. That means it's built and operated by an kept secret provider during its preview phase. What makes this model stand out? Its architect. It is designed specifically for a high-tier reasoning engine, built for long-horizon agentic workflows, complex problem-solving, and deep code execution. Looking for the core specification. First, it features a massive 1 million token context window, supporting up to 130 plus K of tokens for a completion, of course. This allows it to hold extensive historical chart data, multi-time frames, indicators, and deep market context simultaneously without truncation. Second, it is fully multimodal, accepting text, short images, and video as an input. And third, during its current preview, it is available on Open Router at zero cost for prompt and completion tokens. Crucially, for financial and algorithm analysis, OX Alpha supports step-by-step internal reasoning tokens, as well as structured tool calling that enable the model to think through and support for the support and resistance level, evaluate moving averages, and structure its trade entries systematically before outputting a final decision. Because of its strong reasoning and vision capabilities, we want to see how truly perform under the strict financial pressure. Now, let's dive into our testing methodology to see how we structure this benchmark. This benchmark breaks things down into three distinct stages that people often mixed up. Stage 1, market reading. Can the model look at past price and volume data and make a clear sense of what is happening? Stage 2, building the decision. Can it choose between long, short, or no trade and output a complete plan with a real entry, stop loss, profit target, and clear reason for the trade? And stage 3, execution. When we test the plan against the hidden future candles, does the order actually get filled? And what happens after it fills? Here's how data works. The model only sees OHLCV candles, open, high, low, close, and volume, up to a strict cutoff point. It never sees the future. We also convert all dates and into a relative number, ending at 0, and normalizing prices to start at 100. This stops the models from simply memorizing stock names or dates, forcing it to focus purely on the shape of the price action. Okay, we do not feed it moving averages, ETR, support and resistance lines, or trend labels. It has to figure it all out on its own. And remember, saying no trade is a completely valid answer. Walking away from a weak setup is a smart skill, not a failure. Whenever the model takes a trade, the order structure has to make real world sense. On a long, the stop loss must be below the entry and the target above it. On a short, the target is below and the stop loss is above. OX Alpha gets this structure right on all 56 valid trade decisions. That prove the model creates real executable trade plans. But keep in mind, a properly built plan doesn't automatically mean a profitable one. Behind the scenes, our benchmark calculates hidden reference points using our algorithm library. Things like volatility, key pivot levels, support and resistance zones, and breakout retest. We double check these algorithms across both TypeScript and Python. Code to guarantee the math is 100% constant. The model never sees these reference points. We only use them behind the curtain as an objective scoring tool to see if the model's logics match reality. In this research pilot, we tested 64 distinct trading setups across three major instruments, Apple, Bitcoin, and Nvidia. This gives us a healthy mix of both traditional stocks and crypto across multiple historical market dates, rather than just one cherry-picked chart. Now, keep in mind, this is a Fox plant. It's not meant to make swapping claims about every market cycle, but it gives us real, objective data on how the model performs. Once the model makes a decision, our simulator applies the exact same execution rules every single time. Rule number 1, the entry. The earliest an order can open is on the very first candle after the cutoff point. Rule number 2, the fill window. Any limit order has a strict 3-candle window to get filled. If price never touches the limit price, it's recorded as no fill with 0 return. And rule number 3, the time limit. Once a trade is live, it can only stay open for a maximum of 20 candles. Let's look at the numbers and trade frictions. We ran a test on a virtual account of $100,000 with fixed 1% risk per setup. That means 1 hour equals roughly $1,000 of pinned risk. We also build a real market costs. We apply realistic slippage penalties on stops and exits, along with trading fees on both entries and exits. And What happens if a single day candle hits both stop loss and profit targets on the same day? To avoid giving the AI any unfair benefit of doubt, our primary rule always stays conservative. We assume stop loss hit first. Why do these strict rules matter so much? Because they completely eliminate hindsight biases. We cannot just look on a chart after the fact and say, well, price eventually went up, so the long was correct. No, the entry must actually get filled. The stop loss and target must be respected, and the plan has to survive real world execution rules, just like in a systematic trading strategy.
Now, the result: 64 cases were assigned, 56 initial requests completed successfully and produced semantically valid decisions. 8 requests failed. That is an initial request success rate of 87.5%, below the benchmark's 90% eligibility threshold. The run remains visible as a research pilot, but the model is not eligible for primary leaderboard ranking from this publication. Among the 56 valid decisions, Ox Alpha chose 34 longs, 18 shorts, and 4 no trades. So it made a directional decision in 52 cases, more than 92% of its valid answers. This was an active model, not a cautious one. Of those 52 directional orders, 39 filled and 13 never opened. That is a 75% fill rate. Among the 39 filled trades, 12 finished with positive R and 27 with negative R. The filled trade win rate is therefore 30.8%. The exit breakdown makes the weakness even clearer. 26 assigned cases ended at stop loss, 12 at take profit, 1 at the time exit, 13 as no fill, and 4 as no trade. The public decisions sum to negative 4.21 R. The benchmark's mean net R per assigned case is negative 0.066 R because the denominator includes all 64 assignments, while no trades, no fills, and technical failures contribute 0 and remain separately reported. This distinction is crucial. If we discuss only valid responses, we hide operational failure. If we discuss only filled trades, we hide poor entry placement and deliberate no trades. The benchmark keeps all 3 layers visible: transport reliability, decision validity, and economic outcome. The uncertainty interval also tells us not to overstate the result. A 10,000 replicate hierarchical bootstrap estimates mean system performance at negative 0.066 R per assigned case, with a 95% interval from roughly negative 0.337 to positive 0.191. The interval crosses 0. The estimated probability of being above 0 is about 30.3% and below 0 about 69.8%. This pilot leans negative, but it is not a license to claim a universal model ranking. By instrument, Apple was the largest drag, 19 public decisions and negative 3.81 R. Bitcoin produced 25 decisions and negative 0.22 R. Nvidia produced 12 decisions and negative 0.18 R. That pattern tells us the headline loss was not distributed evenly. The Apple cases deserve special attention. So, what is my final verdict on Ox Alpha? On structure and market analysis, the model is genuinely impressive. Every single valid response had proper order structure, clean risk levels, and clear logical commentary. It clearly understands how to build a disciplined trade plan. However, in raw market execution, the numbers fell short. With a net result of negative 4.21R, mostly dragged down by the Apple trades, it proves that eloquent market commentary does not automatically equal trading profits. So, does that mean Ox Alpha is useless? Not at all. I wouldn't let it trade alone on raw data, but it is a very capable reasoning engine. If you hook this model up with external quantitative tools, real-time indicators, and multi-model checks, you can bridge that gap, giving it the extra market grounding it needs to make much better entries and exits. It's not a standalone automated trader just yet, but as an analytical core connected to the right tools, it is a very promising piece of technology. You do not have to take my summary on trust. The public run includes the model level analysis, outcome definitions, limitations, and chart ready trade evidence. Go to the fintechbuilder.com and use the direct Ox Alpha benchmark link in the description. From there, open the trade evidence, choose a cutoff, hover the status, and verify the entry, stop, target, fill, and future price path for yourself. Before publishing this video, I will place the exact live run URL on screen and in the description. The project is built around a simple principle. Financial results should be inspectable, not reduced to one marketing score. If this kind of forensic model evaluation is useful to you, subscribe to the Fintech Builder. The next episode will apply the same discipline to another single model. The same masked market problem, the same decision schema, the same execution policy, and the same willingness to publish both strengths and failures. And I want you to choose the next model. Leave the exact model name in the comments and tell me why you want it tested. Should we investigate another reasoning model, a fast, low-cost model, or a model known for financial analysis? I will use your suggestions to build the next benchmark run. Until then, remember the lesson from that Apple chart. Being directionally right is not enough. A trade only becomes a result when the order exists, the market fills it, and the full path is measured. I am Islam from the Fintech Builder. Thanks for watching, and I will see you in the next evaluation.